Hey guys, welcome to Marketchartwatch. In today's video, I'm going to show you how a $393 trade netted you about $1,800. We're also going to talk about where the implied move is going next, what the futures market is talking about, what the VIX is looking like, and overall what the sentiment is for the market over the next couple of weeks. So you're going to want to stick around for this. So number one, let's start off with the implied move from yesterday by looking at the previous chart. If we zoom in here, we can see we drew this arrow on yesterday, or actually over the weekend, and had you listened to my recommendation from this video, you would have netted about a $1,800 return, or about a 425% return on investment over the weekend. Pretty stout. Now, if you want to learn more about that, you can follow my Marketchartwatch YouTube page or follow my Instagram channel as well. But let's take a closer look and see what happened. So over the weekend, we had some news with the China tariffs that jumped us up a few percent in after hours and pre-market trading, as you can see right here. We noted that in the video. Now, the point I want to make here is that if we look long term, you can see all of these white lines represent some form of high probability resistance or support, depending on which way we're breaking through. And we are headed towards another area of resistance here up above. Now, if we take a look, how far away are we from that? We're about 1.5% away from resistance and about 0.7 to 0.8% away from support. So keep that in mind for the things we're about to talk about. So we have about 1.5% to the upside and about 0.7 or 0.8 to the lower side of this trend channel we're now going to form based on history. Okay. If we come in a little closer, you can see that in the market, with that pre-market trading, we did gap up some 3%. And in doing so, we did create another fair value gap down here that I'll highlight in purple. This is an area where trading broke through and where at some point price may try and find its way back into, or will use as a form of resistance in the future. Now, I said in yesterday's video that we would gap into this trend channel that we've been forming over the last 2 weeks, and we did exactly that. So I'm going to erase this arrow. And we're sitting somewhere in the middle of that trend channel. So this can be kind of a confusing area because now we have to decide, are we going this way or are we going this way? And once we hit either of those, we'll either find support or resistance, and then that will decide the trade direction. So we're going to look at what the market makers are considering for this move. Now, again, we're going to bring up that topic that we're about 0.7 from there and about 1.5% from there. So 1.5% to the upside, 0.7 to the downside. And so we can look at this and say, okay, this would be a higher probability move based on the market direction, but that would take a little bit more volatility than testing this support channel. Well, if we look at the futures market, again, this trades after hours, and this goes even deeper into after hours trading than the options market does. You can see that after hours, we really haven't moved much at all. We're at like a fraction of 1%, which I'm going to call dead even for the day. This is basically saying that the market doesn't know what it wants to do yet. People are going to probably be just kind of sitting around. I would expect lower volatility. Well, if we look at the VIX index, let me get rid of this. If we look at the VIX index, what we can see is, from, what is this? From April, we have really come down in the VIX, right? So the lower this goes, the less volatility there is, the safer your money's going to be in the equities market. Well, if we just look over the past, weekend, the VIX has dropped some 15%. Okay, that is huge, you guys. This is a huge drop. In fact, we created a fair value gap right here where the VIX may want to work back into. So a VIX sitting at 18, that's incredible for us. If we look again, long-term horizon, we average somewhere around 15 on the VIX. So 18, we are not far off at all. So the market seems like it's starting to stabilize. That's what I'm getting at. And we can also see that here in a long-term graph. The market is now officially back to a halfway point in the trend channel here, which is a good stabilization area. So also, we'll take a look at what the market makers are talking about when they're pricing in this move and how that move would have netted you $1,800 yesterday. So on my video here,
What's going on, guys? Anthony.
we talked about, let's just zoom in, we showed some of the options contracts and the premiums we paid. So yesterday's contract was at 564. You would have purchased it, or sorry, on Friday, you would have purchased it for $393 bucks. That contract today closed at $1,896. So for that $1,896 minus what you bought it for, that would have netted you a $1,500 return on investment. But since you did 18, you made 1896 divided 393. You made a 482% return on investment off that one trade. So imagine if you bought $1,000 worth of those trades, that'd be about 1,503 times 3. $1,000 would have netted you about 4,500 bucks. And so say you would have put in 10,000 of those trades, then you can multiply that by 10, and you can see how people are making huge money over the weekend off of this trade. Now, this is small money. I want you to think about this 482% return on investment, and let's look at some of the unusually large trades that were put on and that expired today. Okay, so from like Insight Trading, you can see like 128,000 contracts of this. That's pretty insane. Purchase price near what we paid for ours. Sell price is going to be at what we paid for ours. And so you can see that these are making hundreds of millions of dollars. And if we actually take a look at all the data here, you can see all of these trades. The net trade sentiment, or the flow in between the buying of the calls and the buying of the puts, is hugely in favor of the bullish trend. And bullish trend means going up, for those of you who don't understand the lingo. Okay, so the flow is about $34 million in the direction of bullish trades for options trading today, and around 5 to 6 million in the bearish trade sentiment. So there is a huge upside to the overall market trade sentiment to the bullish side, or the upside. Okay, so this is massive. What does that mean? That means that the VIX is low, so the volatility has gone down. There's not as much fear in the market. The options futures have also stabilized after a huge jump upward. The market makers have priced in to the upside on the call contracts. And the unusually large options flow from the market makers and from those like the BlackRocks of the world, etc., their trade sentiment is hugely bullish on the options trading market. Okay. So what does that all mean? Well, that means that a lot of people that make the most money in the world are bullish on the stock market, which means they're expecting the stock market will continue to climb back to previous highs. That's what I'm trying to get at. And if we look at the close-up view here, so let's say the next couple of days, we can obviously paint the picture of what the market is trying to do. So I can get rid of this trade sentiment. I can get rid of these unusual options trades. And let's just look at tomorrow's implied move. So we can already guess by looking at the futures contracts here, we're flat. By looking at the VIX, we're low. And by looking at our previous close, the market stayed within a very small span of price action. We can assume that tomorrow will likely be very similar, just based on history and the way that the market works when there's a bit of uncertainty after a big move. So today we closed at 582.99 on the SPY. So we'll come to the 583 strike. That's the closest to it. We're going to pay $250 for the call, and we're going to pay $264 for the put. So interesting, the options or the market makers have priced in a move to the downside. But if we look at that move, we'll show you that that move is actually pretty dang small. So we'll do our price of the ask for the call, which is $250. And then we will price in the put, which is $264. We will then multiply that by 0.85 to round off the highs and the lows. And then we will divide that by the strike of 583 to give us our implied options move. You can see our implied move for tomorrow is 0.75%. That is nothing. That's less than a percent implied move. And if we take that implied move and we look at what the market makers are thinking, now we're going to go from market close. You can see that a 0.75 implied move puts us right at the bottom of the trend channel. So all the market makers are saying is that although the market makers and the options flow is extremely bullish, the market makers are saying we're going to test this support here, this like 14-day support, give or take, with a long-term trend noted by the market makers back to the top side, mainly testing this point of resistance. So what's more than likely to happen in tomorrow's trading is we are going to have a down day, test this support here at this 578, 579 mark, and then make our way either same day or the next coming days to this previous area of resistance. Now, I have two charts that look exactly the same, and that previous resistance is back here, and it goes long term here. You can see we have like 10 touch points from over the last year or so where that line goes. So there's a ton of resistance there, but that move would be 1.5% to the upside, give or take, and our move to the lows would be about 0.7%. So it's funny how if you graph all this stuff out beforehand, you can really get an idea of what the market makers are going to price into the options contracts and into the premiums. So what will I expect for tomorrow's implied move? I fully expect either in after hours trading or in pre-market trading that we are absolutely going to test this trend channel. In fact, we might even test this trend channel down here at the 576, 577. But if I were going to swing trade this, I'm absolutely believing that we're going to retest and attempt to break up into this area of resistance. Remember, the market is always trying to get out of this middle zone, and it's always trying to find support or resistance. So it has to test one to test the other, right? It's like a pinball. So that's the move that we're expecting and that the market makers have implied. And then if you look at the long-term bullish sentiment on the large-scale contracts, you can see that the move is actually to test this up here, which is our all-time highs. And so that's what all these trades are. We got another 6.5% to go. Considering we had a 3% day today, I don't see why that's not possible. If none of this makes sense to you, I hope you follow along and watch the videos for more. We'll get into more detailed information on using technicals. For now, we're just looking at the chart. This has been another video from Anthony here at Market Chart Watch. Thanks for watching. Like, share, and subscribe, and we'll see you on the next market close.